correct me if I'm wrong, but I think you've said recently you've been looking for investments that are not tied directly to GDP growth and sort of an all-weather portfolio that you've referred to as rifle shots.
Right.
Could you just elaborate on
Sure.
what that means? Yeah, and give us an example
Okay.
so we can understand. Yeah.
So I own a company called Pure Cycle Technology. I've been involved for the last couple of years, and what they have developed, say licensed from P&G, is a technology whereby they can take polypropylene and take used, post-consumer, as people like to call it, and completely circularly recycle it. They get the whatever impurities, or whether they're colors or whatever, out, other impurities, and then they have plastic that is just like virgin plastic. It's a completely circular recycling process whereby they melt down the polypropylene using a complex process that uses a fancy form of butane, blah, blah, blah. And it came public via SPAC during COVID, and the original CEO and some of the designs didn't quite work, and they brought in a new CEO. He's done a terrific job. And now they are in the process. They've demonstrated the plant works. They've got 17 or 18 trials that are in late stages where they're expecting to start getting purchase orders, and they've got another group of other ones behind that. They've got some orders. What I think the market is waiting to see is someone like P&G or Mars or Pepsi, some big consumer products company, to give them a contract. Then that will validate in the people's minds who haven't maybe done all the research that I've done and other people that are involved, comfort that, okay, this really does work. I mean, it works. It's not debatable. So we're just sitting around waiting for them to be approved to start getting purchase orders. P&G is reserved. Part of their contract is they get 15% of the output from their initial factory in Ironton once they get the things rolling. So the certain states and various countries have mandates about how much plastic has to be recycled. And there are various different ways to do it. There's mechanical, which you kind of crunch it up. There's melting it down and then reprocessing it. This is just a complete circular dissolution process. It's really pretty slick. And the beauty of this is they have an immense opportunity because there's no competition. There are some wannabes, but no one doing what they're doing. And their first factory is ready to go. The next factories will be bigger and cost less. They've got one that's going to be opening up in Thailand. In any case, what you have is a company who's got open-ended growth with a barrier to entry and therefore protection of their margins. Their cost on this is not that far from what plain virgin is. And so it'll be price competitive. It may cost a bit more, but some of these companies have, like in a bumper, it might add $10. And I think the cost of a bumper is, I don't know, $100. This is going off the top of my head. In other words, the cost, in a car, $10 extra, when you have to meet, if you're an auto company, you have to meet a certain recycling factor based on a government edict. That's no big deal. So what I like about it is their business will grow and march on regardless of what happens in the economy. The economy is not going to make any real difference to their basic business. Okay. And that's the kind of thing I'm thinking of. I have a couple of other ones. But that's what I'm looking for, where it doesn't really matter if the economy is strong, fast, inflation's high, low. It's like they got a path to growth that has nothing to do with all of these other things. That's what I'm looking for.
Yeah, so I want the audience to understand as well, this is not in any way an endorsement or a recommendation or investment advice in any way, but it just wanted to kind of have Bill kind of explain his thought process and how he's approaching evaluating investments in this market. Yeah, I think that's the lesson. Yeah,
that's what an idiosyncratic idea that's got barriers to entry, doesn't need those are some of the characteristics.
The way you're thinking about it, right? Very helpful. Okay, so I want to ask you about gold. Gold has been on a historic run this year. I think you were very early to this as an investment, and you were also very early to get in on gold miners. And I want to ask your thoughts on this because gold has obviously been pulling back in a correction here. Do you think that the move in gold is over for now, or are you expecting more upside? And do you think that miners or gold itself are going to outperform going forward from here? Like, what are your thoughts on where we are with gold right now?
Well, gold is a particularly difficult security to try to analyze because there's no fundamentals. There's no real data. I mean, we know roughly what it costs the industry average gold miner to produce gold. We can say it's 13, 14, 1,500 bucks an ounce. But beyond that, it's not like, let's say we're interested in a retailer. We can do channel checks. We can see what the traffic's been like. You can monitor. You can figure out ways. Lots of companies you can figure out ways to try to monitor how the business is going. The executives of the company can have a strong opinion about how something's going to roll out. Well, no mining executive knows where the price of gold's going to go. No one does. It's not knowable. I mean, we all pretend, we look at the charts and, you can sometimes get an edge because a certain chart pattern looks in a certain way that tends to create a reaction that's basically psychological that makes this, that, or momentum and things like that. But so if you can get the direction right, you're doing really well. So if you're looking at gold mining companies, so there aren't a lot of fundamentals we can look at, but we can look at shifts. In the early 80s, when I got in the investment business, it was the tail end of when everyone was, a prudent portfolio should have 5 or 10% gold. Volcker broke the back of inflation. Gold was a poor asset for 20 years after that. And then when the bubble burst and Greenspan's lunacy started to get exposed, then gold started to do better. And it's done better at every iteration of the Fed making mistakes. And now we have a situation where, gold is now, is gold a currency? Is it a store of value? Is it a safe haven asset? Well, it's kind of all of the above. And it takes on different characteristics at different moments in time. Once the Western world confiscated Russia's gold during the start of the Ukraine war, that kind of kicked off a new leg. And now you've got various central banks buying it. Asians have been big buyers. Indians have been big buyers. Americans have not been the driving force behind this. And you can see it. I think the GDX coming into this year had a $10 or $12 billion market cap. We had $3 billion of net redemptions out of the GDX, the ETF. So there's been no real public participation in any meaningful way in gold or gold equities measured by the things you can measure. Like interest in the ETFs is a good way to get a handle on it. And so gold miners, while a lot of them have done really well running what are tough businesses, and they've put up good numbers, they didn't really get any love until the last 6 or 8 months. Now we're having the first nasty pullback since gold had the most recent run off the spring, wherever it was in the spring. So it's a particularly so gold's hard to find a price and have a good feeling about. So you got a mining company. And you can look at all the variables about the mining company, but then a lot's dictated by the price of this gold, which is hard to pin down. So it's a frustrating, difficult area to really to get your arms around because there's no real, tangible thing you can get your arms around like we can. Like I could talk about Pure Cycle or a couple other companies all day long about what I'm looking for this and that, everything means. That doesn't exist when it's gold and gold miners. So it makes it hard and kind of frustrating. And then and then there's all kinds of crazy stuff about gold being suppressed and silver being suppressed. I was the lead director of Pan American Silver from 1996 to 2011. Silver went from $4 to $40. Pan American went from $4 to $40, and I retired off the board thinking, okay, it's not getting much better than this. Unfortunately, that was about the time that big 3 or 4 year correction happened. But anyway. So it's difficult. And so I have some rules. If I'm going to be involved in a gold mining company, I want them in good spots, like the US or Canada. I want gold mines that have high grade, and I want them to have growth potential within their own properties. And when you start to narrow the list down like that, there aren't a lot of choices. My favorite choices are Agnico Eagle, Alamos Gold, and Wesdome. I own all 3 of these. and I have for some time. And there have been some others I've owned, but they are the three that best typify the rules that I have for what I want to see in a mining company.
Want insights on what's really moving markets and how we're trading each event? Subscribe to our channel, then join the Milk Road Macro and Macro Pro newsletters. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.